What's up guys, my name is Jason. Now in today's video, I'm going to be reacting to an interview of a Morgan Stanley analyst talking about what he believes could lead Tesla to being a $1 to $2 trillion company in the future. I'll also be giving my opinion on where Tesla will be in the next 10 years. But anyways, let's just get into the video.
When I hear you, Adam, talk about Tesla, it sounds like you're making a pretty bullish thesis on the stock. And I believe you keep raising your price target, including after the last quarter, but still are on hold and not recommending a buy on the stock. Is that right? Why?
Yeah, I think we're at a point where, Tesla has to be, for an investor to kind of put fresh money into Tesla, or we think to even hold Tesla for 3 to 5 years versus other names across, let's say, semiconductors or batteries or other competitors that are emerging. It's got to be more than cars here at a $400 billion valuation.
Wow, this aged well. Keep in mind that this interview was literally yesterday. And did anyone else see the full self-driving beta that people got to experience, or was I just dreaming? That's going to be one of, if not the biggest source of Tesla's revenue in the next 5 to 15 years. I'm talking about full self-driving taxis, of course. And on top of that, they're going to have the over-the-air car updates that will just go straight to Tesla's bottom line. Like, come on, man. You got to come into this interview and have your research already done, because this is information that's already been out for a while now, and it's kind of getting tiring just repeating stuff like this. Because now you look stupid because you have an 18-year-old who seems to know more about Tesla than you, the head of global autos and share mobility at Morgan Stanley. Yeah, I did my research.
It should be something on moving from price times units sold to monthly active user and ARPU, genuinely. That might seem like a stretch, but we think that the incremental buyer of Tesla shares here, and we think going forward, will be internet software and tech hardware, that community that can see Tesla as an ecosystem that can produce recurring, reliable, software-driven revenue. Some of those software revenue can be between 70 and 100% EBITDA margin, right? And then when you compare that business model to some of the comparables in the software space, right, that's when 40 or 50 times T+2 EBITDA might seem reasonable. So that's just something where I think from an automotive seat, a difficult call for us to make unless we bring in our experts across a number of other sectors, across the tech platform. That's what we're working on, discovering a bit more, so we can make more of a competent call or not, as may be appropriate. But right now, we're still in the diligence phase, and I think that there's still a lot more discovery to do, a lot of unproven parts of the model we need to respect.
Okay, now I'm going to leave this one up to you guys. Did he redeem himself here? He did say that Tesla being able to obtain recurring software-driven revenue was a stretch, and they're kind of already doing it. Although it's not that big of a portion of their revenues, they're getting revenue from exactly that. Software. I mean, I personally don't see the point of having FSD if it's just going to come with a $30K car, like $30,000 for a car, and it has full self-driving, because the money spent to make a team to make the software and the hardware for the FSD would literally be spent best anywhere else, because if you're selling it for $0, what's the point? You have no return on investment. That's literally like Tesla saying they're going to make cars just to give them out for free. Does that make sense? So now this leads me to ask this analyst, even though there's probably a closer chance to 0 than 0.1 that he's watching this, why do you think Tesla made FSD software and hardware?
And so your base case, Adam, is 360, about 20%
Correct.
below today's level, but with an equal rating. Bear case is 114, bull case is 713. It sounds, by the way you're talking, that you think the bull case is more likely than the bear case. Is that fair?
We're not putting probabilities on the bull case, but I would say in our, given where the model is going right now, you have to include ARPU times monthly active user. You have to include TAMs that extend way, way beyond auto or even the trucking industry. You need to include industries like insurance or the entire energy complex. You need to include content. You need to include other ways to monetize data, either directly or indirectly. That's how you can get to cases, frankly, even beyond our bull case, right? We regularly talk to investors that think Tesla can be worth in excess of the most valuable companies in the world right now. You're not going to get there with autos. You're going to get there by them using autos to become something altogether different, sticky, recurring, and higher multiple.
Okay, great way to end it off, Adam. I completely agree. I don't think that there's any way that anyone could think that Tesla is going to be a $1, $2, $3 trillion company just off autos alone. There's so many different segments that'll add up to that valuation, which in my bull case is a $3 trillion valuation, which if you didn't know would be $3,000 post-split, which happened in September. But anyways, I hope you guys enjoyed this video, and if you made it this far, please don't forget to leave without hitting a like and subscribe. It means so much, and it only takes a second. But trust me when I say hit that subscribe button, because I got a banger series that's coming out very soon, and I know that a lot of you guys will like it, so I want you guys to stay tuned for that one. With that being said, I'll see you guys in the next one. Peace.